Most 18-year-olds in the United States who go off to college and are taking on some amount of student debt don't really understand how that debt works. And it's not what you might think. Student loans are and can be a wonderful thing if you know how to use them. And so in this lecture, I'm going to explain what student loans are and how to use them. But before I can do that, I need to explain another type of loan, a home mortgage loan. And before I can do that, I have to tell you about my great-grandfather. My name is Jeffrey Kaplan, and I'm an assistant professor of philosophy here at the University of North Carolina at Greensboro. This is my great-grandfather, Yaakov Yisrael Pickman, or Yankel for short. I'm named after him. He moved from Eastern Europe, what is now Belarus, to New York City as part of a large wave of Jewish immigrants in the 1890s. These were Jews who were fleeing pogroms, which are large mass murder events where non-Jewish neighbors would attempt to, and often succeed in, murdering entire villages or towns of Jews in Eastern Europe. My great-grandfather came to the United States with nothing. Maybe $20, a single shirt, a single pair of pants. That's it. But me, his great-grandson, I grew up as a fairly comfortable middle-class kid in New Jersey. How did this happen? It didn't happen the fast way. The fast route, whereby a family makes the leap from poverty to the middle class in a single generation, typically makes use of one of the most powerful financial tools that has ever existed, and that is education, or more specifically, the student loan. Some of those Jewish immigrants from the 1890s took the fast route, but for the most part, my family didn't. We took a somewhat slower route to the middle class, which took us 2 generations, and to do that, we used a different financial tool, although still a very powerful one, home ownership, or more specifically, the home mortgage loan. You see, Jews living in the United States at this time faced serious oppression and anti-Semitism, and one form of that was housing discrimination. And so my grandparents and other members of my family of my grandparents' generation have various stories about exactly which neighborhoods in New York City or which towns in New Jersey would or wouldn't sell their homes to Jews. This was in contrast with the kind of more serious housing discrimination that Black Americans and members of certain other groups faced in the form of redlining and things like that. But at the end of the day, when Jewish Americans could find a home to buy, they would go to the bank, and these, the people working at the bank would look at these Eastern European Jews and they would basically feel like, we've got to give them a loan. They're kind of white. It was by way of home ownership that my family was able to pull itself up out of poverty over the course of 2 generations. And so now I need to explain how the home mortgage loan works. Let's say there's a house and the house costs $200,000. You don't have $200,000, so you're going to take out a loan from the bank. And the way that this loan works is that you have to put down 20%, which in this case is $40,000. So that's $40,000 of your money that you had to save somehow. You put down $40,000 of your own money, and then the bank will put down the other $160,000, and you'll have to pay the bank that $160,000 back, plus an additional, let's say, 3% interest. And this will be over the course of 30 years. Paying back the loan, plus the 3% interest, and some other things like homeowners insurance and taxes, means that, let's just say, you're paying $1,000 a month to live in this home. The 3% interest is pretty low. I mean, this is historically very low. This is like what you're going to get these days, but it used to be 12% or 15% or whatever. But the reason that this number can be relatively low is because the house itself is collateral. This means that if you don't pay back the loan, if you stop making your monthly payments, then the bank gets to keep the house. The house is the collateral. The house which is worth money, it's property, it's worth something. It's what guarantees the loan. If you stop paying the loan, then the bank gets the house. If you were renting the house, you'd probably pay somewhere around the same $1,000 a month, except for you're paying $1,000 a month to live in someone else's house. If you pay that $1,000 a month in a mortgage payment to the bank, and you do that for 30 years, every single month, then at the end of 30 years, you get to keep the house. Whereas if you pay someone $1,000 every month for 30 years to rent their home, then at the end, it's still their home. You don't get to keep it. And here's the other thing. Rent goes up. If you start renting a house for $1,000 a month, and you do that for 30 years, after 30 years, you're going to be paying like $4,000 a month to rent that same house. Whereas if you took out a fixed rate mortgage loan, then that $1,000 stays $1,000 the whole time over the course of the whole 30 years, right? So it's actually considerably cheaper over the course of 30 years to buy the house than it is to rent it. And at the end of all that, you get to keep a house. Oh, and one more thing. The value of the house goes way up. If when you bought it, it was worth $200,000, then by the time you're done paying off that 30-year fixed rate mortgage loan, this house that you now get to keep is worth like $1 million. So now you own something that's worth $1 million. You're rich now. And it was cheaper than if you had just rented in the first place. At the right time, under the right circumstances, done in the right way, home ownership is a wonderful thing. It is an incredibly powerful financial tool, and it's what my family used to go from being dirt poor to being comfortably middle class in 2 generations. If you're going to live somewhere for 5 years or 10 years or longer, then usually, under most circumstances, it is much more financially prudent to buy the house or apartment or whatever than to rent it. But there's a catch. There's a certain kind of risk involved, and that risk is this down payment. That was your money. You scratched and clawed your way to save that money over however many years so that you could get the loan in the first place. If you live in this house, you take out a loan and you live in this house for a year, and then after a year, you lose your job, or you get lazy, or whatever, you get forgetful, whatever it is, something happens, and you just stop paying the loan. You just stop paying. Well, what happens is that the bank gets to keep the house. You are now homeless, and you've lost $40,000. That down payment is gone if you stop paying a home mortgage loan. Whereas, if you had just rented, although renting over the long term is much more expensive, right? If you rent this house for $1,000 a month, and then after a year you just stop paying your rent, then you get evicted. You now have no place to live. You have to find some other place to live, but you don't lose $40,000. So the point is, a mortgage is smart, but it's a risk. It's a kind of a gamble. And it's the kind of gamble where you're betting on yourself. You're betting that you are going to pay this mortgage payment consistently every month for 30 years. That's the bet that you're making. It's going to turn out that education, and specifically the student loan, has the same structure as a mortgage. So let's talk about who's paying for you to go to college. For most students in the United States, it's 3 groups of people. It's society, your parents, and your future self. First, society. If you're attending a public university, like this one where I teach, right, then society has made a decision. We have made a decision that it's a wise investment for a whole society to pick out some people with the right potential, and to just pay for them to learn. This will improve everything for everyone. And so if you were admitted to a public college or university, then you're one of the chosen ones. Society has decided that it's going to help everyone to have you get an education. And then if you're lucky, then maybe your parents or other members of your family are paying for you to get an education. And if you're taking out a student loan, then you've decided that yourself in the future should have to pay for you to get an education. Let me just interject to say that when I'm talking about an education, I'm not talking about for-profit colleges and universities. If you're ever considering whether to attend some institution of higher education, just Google them, look at their Wikipedia page, and figure out whether they are for-profit or not for profit. Since these colleges or universities would probably sue me, I'm not going to say that they're basically money laundering operations that just sort of convey federal tax-subsidized loans and transfer them over into yachts and beach houses for a few random executives, all the while leaving the students in like insurmountable student debt. I'm not going to say that, but the point is, anyway, stay away from these. But as long as you're considering a legitimate, accredited, not-for-profit college or university in the United States, you are, like taking out a home loan, you are making a smart bet or a smart gamble on yourself. It's smart because people with college degrees make considerably more money than people with merely high school diplomas. I'll put some of the numbers in the description below this video. One estimate has it that the return on investment for a college education is something like 14%, which is better than the stock market. But that brings us to the risk part. What's the risk? A few seconds ago, I didn't say people who attend college make more money. No. I said people with college degrees. You have to graduate in order for this to work out. Just like in order for the home mortgage loan to work out, you have to pay that mortgage payment every month for 30 years. So too, in order for this student loan to work out, in order for it not to turn into a crippling disaster, you have to graduate. You have to study, you have to show up to class, you have to do the reading, you have to get good grades, and you have to graduate. Because if you don't graduate, then you still have to pay back the loans. You still have to pay back the loans. You still have the debt. But because you didn't graduate, you're not going to make more money to make it easy or possible to pay back those loans. And so you're going to be weighed down by this debt without the capability, that is the diploma, right, and the higher paying job, without the capability to handle that. And it's even worse than this, and I bet they didn't tell you this when you took out your student loans, but student loans are non-bankruptable. These are the only kinds of loans that you should take out. But let's say you take out a whole bunch of other loans that are foolish. You take out a car loan to buy a new car. Don't do this. Instead, just buy a used car. Or you pay for a whole bunch of stuff on a credit card, and every month you only make the minimum payment. You don't pay the whole thing off. This is a terrible mistake because credit cards charge exorbitant amounts of interest and they cripple people financially for their entire lives. Or you take out a loan to buy a boat. You can't afford that boat. Don't buy the boat. So you've made these terrible financial decisions, let's say, and you just don't make enough money. You just don't have enough money to pay back these loans. Well, what you can do is you can file for bankruptcy. The most common type of bankruptcy is Chapter 7 liquidation bankruptcy. They liquidate. They sell your stuff. The court is going to take your television and sell it, and take the money that they get from selling your television and give it to the banks. And if you have a nice car, they're going to take your nice car. They'll give you a less nice car so that you can get to where you need to go. But the nice car, they're going to take that, they're going to sell it, and they're going to give the money to the bank. The court will not make you homeless when you file for bankruptcy. But they're not going to let you live in a nice home. They're not going to let you drive a nice car. They're not going to let you have a fancy television or whatever. They're going to take your stuff because really it was never your stuff. You borrowed someone else's money, the bank's money, to get that stuff. That's how bankruptcy works. And it sounds terrible because they're taking all of this stuff. But actually, if you're in this situation, it's amazing. It's wonderful. You need bankruptcy because what happens is after they take all your stuff and sell it, is they forgive your loans. That is, your loans disappear. You don't have to pay them back. That's how bankruptcy works. But student loans are just a special type of loan that is non-bankruptable. That is, if you file for bankruptcy, then they'll sell your stuff and they'll wipe out your car loan and your boat loan and your credit card loans, but they won't wipe out your student loans. Once you take out a student loan, you have to pay it back, whether you graduate or not. The point of this is not to scare you away from student loans. Student loans are a wonderful thing, just like a mortgage loan is a wonderful thing, if you get the right amount and you use it the right way. Too much or too many home mortgages will doom you, right? But the right home mortgage at the right time can lift a family up out of poverty for forever. And the same thing with student loans. Too much student loans of the wrong type, and certainly of the type where you don't graduate, they will disable you financially. They will debilitate you. But the right student loan taken out at the right time and where you study your butt off and get good grades, well, that can lift a family up out of poverty even faster, even more quickly. You can get incredibly high-paying jobs if you ace college. If you're the valedictorian of your college class at a reputable, legit college or university, you can, if you choose, make a lot of money in a way that you just never could, or almost certainly never could, if you just have a high school diploma. But you need to do it the right way. It's a smart risk. It's smart because it presents a fantastic financial opportunity for you, but it's a risk because you're betting on yourself. You're betting that you're going to pay that mortgage every month for 30 years, or you're betting that you're going to do the reading and show up to class and get good grades so that you can graduate and get a good job. If you make good on that bet, you're good. Why am I telling you this? Why am I telling you how much of a risk student loans are? To scare you? Yes, to scare you a little bit. I want to scare you a little bit into working hard so that you graduate and don't turn this incredible financial opportunity into a disaster. When it comes to money, you want to take the long view. Let's say that you've taken out student loans to go to college, and you have enough money via loans and whatever other money you can cobble together, such that you can survive, like you'll be able to buy enough food and you'll have a roof over your head or whatever, right? You'll be able to survive through these years. You have enough money for that. And then you're facing the following decision. Should I take a part-time job just so I have some more spending cash, right? So I can live a little bit more of a fun lifestyle, just during these college years. Would that be a good financial decision? No. You're in a precarious place. You're taking a risk by getting an education and taking out these student loans. If you can swing it where you don't have to take a part-time job and instead you can spend all of your time focusing on your studies, you should do that so that you can guarantee that you're going to get good grades and graduate and get a good high-paying job. I'm not saying not to take a job if you need to take a job in order to make enough money to, buy rice and beans and ramen noodles or whatever. You've got to do whatever you've got to do to survive. But when it comes to money, take the long view. The point of these years in college is to set you up for the rest of your life. So if that means you have to make some small sacrifices now, do it. You see this? Do you know what this is? This is a smartphone lockbox. Here's the way it works. You open it up, you take your smartphone, and you put it inside. Then you close it. You press some buttons or whatever, you set the amount of time that you want, and then it locks. It locks your phone in the box for whatever amount of time. And if you get a phone call and it's an emergency, there are these holes here, right? There are these holes in the lockbox. And so you can swipe to answer the call, and then there's this extra hole up here, you can press the speakerphone button. So if it's an emergency, you can talk to someone on the phone through the box, right, on speakerphone. But you can't place a call, right? There's no way to get in there to place a call. If there's a text message that shows up on the screen, you can see the text message, but you can't send a text message. What happens if you lock your phone away in this box, and then you want your phone again? Too bad. There's no way in. There's no override button on the side, nothing. The only way to get your phone out of this lockbox before the time ends is to rip the lockbox apart. I mean, this is plastic, you know? Like, I physically could break this thing apart, although I don't want to unless I really, really need to, because this thing cost me $37 on Amazon. I bought this for myself because I'm an assistant professor here at the University of North Carolina at Greensboro. And in a few years, I'm going to go up for tenure. Tenure means that if in the next few years I publish enough quality academic papers in fancy academic philosophy journals, then I'll get tenure and I'll have my job for the rest of my life, guaranteed, locked in, as it were. But if I don't publish enough academic papers, if I just sort of slack off and watch Netflix and scroll around on the internet or whatever for the next few years, and then don't get tenure, then I lose my job. And I have 2 children, and they're in a school in this town, right? And I have a wife, and we own a home, and my kids have bedrooms in the house, and they like their bedrooms. And so I'm just not going to let it happen that I don't publish enough papers and then don't get tenure and then have to force my kids to leave their school and leave all of their friends and leave their bedrooms in the house and everything. I'm just not going to let that happen. And I'm sure as hell not going to let that happen because some tech bros built a smartphone that's like super addictive and it connects to a bunch of super addictive websites. My point in saying this is that I'm not messing around. This phone goes in the box and gets locked when I go into my office to get my work done. You shouldn't be messing around either. If you've taken out a student loan, or for that matter, if your parents are paying for this, or if society is paying for it, then you owe it to those people, to society, or to your parents, or to your future self. You owe it to them not to mess around. In this series of videos, I'm going to explain to you how to study and how to learn and how to get good grades. But before I do that, I'm trying to convince you that you should want to study and learn and get good grades. And that's the purpose of this lecture that you're watching right now. Those lectures that are going to explain those skills, those are the game plan. But this is the pep talk. This is trying to pep you up and get you ready to do what you've got to do. If you have taken out a student loan to go to this university, good. Good job, good decision. You're going to utilize one of the most powerful financial tools that has ever existed. But you're placing a bet on yourself. And now you need to make sure that that was a good bet. So you're in the same boat as me, right? We need to make sure that it was a good bet. We're not messing around. You're betting on yourself, society is betting on you, your parents are betting on you. Don't get scared, get serious. Let's go. Let's get to work. This video is over.